Welcome back to the channel, investors. Today we're going to talk about Tesla, but I also want to just talk about the automakers in general in a lot of this video here. What I'm going to do is go through a couple articles, give you guys my thesis on the whole car industry for this year and possibly going into next year. Along with that, guys, we're going to go over some charts for Tesla and just kind of see where we are from a technical standpoint as well. All right, so if you find this information valuable, I just ask that you smash the thumbs up, consider subscribing, and let's get into it. So first thing I want to go over, guys, is a lot of data I'm coming across, guys, for the auto industry is that auto sales are definitely slowing down here, okay? And for a few reasons. One is that production is having trouble. So they're definitely having trouble getting raw materials to build the vehicles. Along with that, obviously, we know about the chip shortage. So that is causing definitely speed bumps in manufacturing. On top of that, we're getting a consumer that's actually slowing down and not as interested in these higher end vehicles. That's why we got the affluent buyers walking away here. So oddly enough, though, you will come across articles that still speak positive about certain companies. And, you know, Tesla's order rate is surging, they're saying, due to gas prices. Now, I don't know if this was a short-term surge or if this is a sustainable surge. When I look at the backdrop of the economy, what's going on in China and also the Russia-Ukraine situation, I think this is kind of just a pull forward, if you will. I really relate this to something like Zoom during the pandemic. You know, Zoom was so important for communication during the pandemic, but once things went back to normal, obviously we see Zoom coming down as far as a multiple. And I think that's the same thing that's going on with the EV space, guys. If gas prices were back down to $1.99, $2, I really think that we would probably see less of this EV talk and more of just living our life. But it seems that this gas scare, this oil shortage and this gas scare is causing people to really redirect their thought process. But even with that being said, guys, we do have good articles and we have bad articles on Tesla. One thing kind of leads to the same conclusion here is the start of production and deliveries at Gigafactory Texas could help later this year, but delivery timelines are expected to increase for now. So that means that people are not getting their vehicles. And the one thing I wonder is if these are pre-ordered and you put a down payment on the vehicle, can you cancel that obligation or are you still on the hook in some way, shape, or form to actually purchase the vehicle? Because I feel like this could absolutely be a problem for Tesla's numbers going forward. And that would be a buying opportunity for longer term investors, as I do think that would make the price come down if they obviously disappoint on numbers because people cancel their orders. So it's just something to think about here. We could see that there's an auto shortage. Along with that, there's delays with deliveries here. And we have a consumer, guys, that is more fearful than they were right now during the pandemic. So they are more scared right now due to inflation and just uncertainty with the economy versus where they were in June of 2020 during the pandemic. And why I think that is obviously they had a federal government that was willing to do anything to make sure people were taken care of. And I think that gave a vote of confidence. And obviously that stimulation helped us get out of those times. But now we're back to more of a hawkish Fed. And we still have a pandemic and we also have a war going on right now, okay? China is completely shut down for COVID. So you have a lot of these other things that are spilling over here to the United States economy and just the consumer in general. The other thing I want to talk about, guys, is going to be the elephant in the room. It's going to be interest rates rising. So I'm just using Carvana's website. I don't know what kind of interest rate they're putting in here, but if I have an average credit score and I am buying a $75,000 car from Tesla or just a $75,000 car in general, my payments are $1,253 a month, okay? That's with $1,000 down. These types of vehicles are going to be a priority with the consumer's sentiment being as low as it is. Now, I could be wrong. They could absolutely catch us off guard. When I look at Tesla's chart, guys, it's phenomenal. Okay, this is just a ridiculous chart. We're looking at a 3-year, 1-week chart right here, and basically it just done nothing but go completely up in a straight line here, okay? And then formulated a descending wedge, consolidated here right around $600 a share. Now, I want to zoom in on this point here. We obviously broke back out of that wedge and came down, and right now we have a buy signal on. We still have a strong buy signal right now on Tesla, okay? Now, the one thing I'm noticing is it looks like Tesla is actually getting lower highs here, okay? I'm seeing lower highs coming in on Tesla's chart. I'm also seeing a new lower low here down at the bottom, it looks like. So we obviously had this great breakout of the wedge, came up, squeezed up to $1,243, guys, from peak to trough. That's like 100% move, which is just ridiculous. Call it 110% move from peak to trough. Just absolutely sick move from the stock, okay? But right now what I'm seeing is we're getting lower highs in here, and we're kind of trading in a downward channel. So interesting enough, you know, I don't know if we'll break out of this channel. We had a sell signal at 940, squeezed down, came back screaming up, and now we're gapping up here. I think we will fill this gap pretty soon. And I think we will probably start heading back down in this channel here, okay? A similar chart to this, guys, was actually Apple, which was in a downward channel that broke out. See, Apple had this similar move, guys, where it was down in this channel and then sold off and then just came screaming back up in the same week and broke out. So, you know, just because you're in a downward channel, you still have to absolutely watch what's going on, as Apple would just beautifully bounce off of this moving average here and then just came screaming back up. So, you know, definitely a technical bounce off of the moving average here. Let's take a look at Tesla and see if Tesla has the same moving average underneath it. And look at that, guys. Tesla basically did the same move. It bounced off of that moving average right here. Yes, it broke below it, but squeezed back up, and now it's up. So now what I want to do, guys, is take a look at Ford's chart, okay? And similar situation in just automotive, guys. Now, Ford is in a similar situation where it's hanging on a little bit more, consolidating a little bit more off of that longer term moving average here, okay? Had the wedge, broke out, okay? Got a sell signal at 23.28. That sell signal is still on, guys, okay? So I wouldn't touch Ford at these levels quite yet until we get some more consolidation and get more of a buy signal. But this looks like it could be primed here, guys, for a move back up. Okay, so definitely keep an eye on Ford as it looks like it looks like it's consolidating here, and it's definitely going to make either a move down or a move back up, but it looks like it's priming itself for a pretty big move here, as this was a pretty strong sell-off. We're getting some consolidation on the moving averages, and if we break below, the shorts probably will take this down back to $11 to $12, but if we get back up, get some buying pressure, this thing can go back to $24, $25. So I'm expecting Ford here to probably make a pretty big move in the near future, guys. And just by the chart and what's going on with automotives in general, I would be cautious. Okay, I'm not saying buy or sell. This is not financial advice, guys. This is just me going through the charts and kind of breaking down some of the things that I'm personally seeing. Now, could we absolutely break out to newer highs? I think so. I think you would need a catalyst here, guys, to get out of this channel. But as of right now, it looks like the more logical move is going to be at least filling this gap and having some sort of pullback here. Okay, that's just my opinion. I do think we could, however, come back down lower and test lower lows. You know, it definitely has a nice bullish move here, and it could break out, but I think there's a higher probability with the backdrop of the automotive industry, we get a pullback down, okay? Just my opinion, guys. Hopefully you enjoyed my dive in. I will say, though, Tesla's been holding strong in this Tesla's been really holding strong in this pullback from the market. So, you know, maybe I'm wrong and this thing shoots the other way, but from the looks of it, guys, it looks like it's heading into lower highs here and lower lows, okay? So lower highs and lower lows. Lower high, maybe a lower low, okay? That's the pattern that I'm currently seeing with the stock. So as always, guys, appreciate your time. Thank you so much for spending it with me, and we will see you next time, investors. Peace.